Welcome back, guys. This is already the fourth edition of Crypto Class. It's gone quick, right? So in this video, we're going to be talking about indicators. Specifically, we're going to be talking about the stochastic RSI. We're going to be going over future indicators in future videos, but I'm trying to keep a simplified flow, guys. We went up what is trading, the makeup of the candlestick. We looked at how you can apply support and resistance to your charts. We looked at last week how you can find tops and how you can find bottoms by looking at candlestick patterns and combination of candlestick patterns. Now we're going to add in the indicators, so it's going to continue from the last one. But before we get into it, guys, there's probably about 100 of you, 150 of you guys watching this video. So out of the normal amount of videos that people watch, the analysis ones, the ones where they want to know how much something costs, how much it's going to be, that's 2,000-3,000 guys that I'm averaging at the moment. So what I'm saying is you're a limited bunch. However, it's all about probabilities, guys. It's all about who self-develops themselves the most, who wants to actually understand this data themselves, who wants to actually, at the end of it, be able to make their own decisions, guys, and not rely on people like me. I won't be around forever. Any of the other crypto people are not going to be around forever, guys. You need to understand how to do it yourself, and you need to understand how to get that edge in your market yourself. So just hats off to you guys. There's only a few of you watching it, and I'm going to continue going into Crypto Class going forward because I do think it's beneficial for the community. And at the end of the day, I've got 100, 150 people that are really educating themselves that are going to be successful. Then that's me happy, guys. If I've got one or two people that I can make successful, that's me happy. So that was just a big thank you to the few of you that are watching edition 4 of Crypto Clash. Let's get into indicators and the stochastic RSI. Okay, so within the first 3 videos, guys, are things starting to make a little bit more sense? Are things starting to fall into place? We started to understand the makeup of the candlestick, and I'm going to touch a little bit more on that. I know it's about the stochastic, guys, but these things all go hand in hand. It's all about getting the edge. So we went through the makeup of the candlestick. Remember, guys, the 3-bar reversal. This is one way that you can tell when you've reached a top. When you've got a resistance point and you see a 3-bar reversal, that's additional confluence that you've reached a top and you're likely to pull back. So these are things that give you an edge in the market. And the next thing, obviously, is your indicators. So we're going to be talking about, in this video, the stochastic RSI. You've got the RSI down here. We'll go over that in future videos. But for now, just going to get rid of that. And I'm going to bring up the stochastic RSI. So this is the stochastic RSI. It's an oscillating indicator, and it indicates momentum. It tells you when something is overbought or oversold. So you've got the lines here. You've got above 80, that is overbought. And you've got below 20, that is oversold. And then you've got the mid region here, between 20 and between 80. So you see that this is oscillating. Now, what does oscillating mean? It goes up and it goes down between regions of overbought and oversold. It measures momentum, guys. So at this point here, you can tell that the market is exhausted. At this point here, you could tell that the market is exhausted. So what we'll do is we'll just have a look. Those are 2 examples. And you can see here, we had a pullback here, we had a pullback here, we had a push up, and then we had a pullback. Can you see, as you look at the stochastic, price action follows. Now, when does this thing become more powerful? This thing becomes more powerful when you're trending, guys. When you're trending upwards, when you're trending downwards, the stochastic works really well. And I'm going to show you exactly how you can use it to your advantage. When it's in a sideways range, it's a little bit more choppy. It's a little bit more difficult. It does still work, guys, but it's more difficult. You need to really look at support and you really need to look at resistance, because when you're in an accumulator phase, you're in a build phase. So you can use this differently in a build phase, but we're going to be talking about how you can use it when the market's trending. So basically, the aim of the game, we talk about it, and I'm going to go over it again and again, guys, because I want it to drill home and drill home. And I want you to have these aha moments. I want you to understand, and I want it to all connect together. So you're putting in your highs and you're putting in your lows, your higher lows. You're putting in your higher highs and you're putting in your higher lows. What trend is that, guys? You know that that's a bullish trend. As long as we're putting in higher highs and as long as we're putting in higher lows, it's a bullish trend. When do we know when it's not a bullish trend? What happens when it's not a bullish trend? This happens. We come back down and we take out the previous higher low. That means that the bears have pushed price below the previous higher low, creating a lower low. Then you're expected to come back up and create a lower high. So that's the aim of the game, guys. That's a trend. That's how you can tell when a trend's reversing. But when you're adding support and resistance, just an example, you've got support here, you've got resistance here. So you've got your stochastic, which is oscillating up and down. And what you'll see is price action moving, price action moving, price action moving. You get to the top here, and what you'll tend to see is things like this: 3-bar reversals, doji candles, some kind of an indication from the candlestick, which is telling you that is a sticking point, that's a resistance point. Then you look at the stochastic, and if the stochastic's oversold at that point, you're at resistance. You know you're at resistance. We showed you how you add your support. We showed you how you add resistance in the second video. So you know how to do that. You're at resistance. You can see these candlestick patterns, these 3-bar reversals. Go back and watch the previous video about 3-bar reversals. Then you're at resistance. The stochastic's overbought. What is that indicating, guys? That's indicating that you're at a strong resistance. If you've accumulated here, or you're trading from the bottom here, this is an area that you need to take profits. Now, trading's a probability game. So we can look at this and we can follow exactly, or we'll go through in real time exactly how the stochastic follows the chart and how you can use it to your advantage. But basically what you're thinking is this here is a resistance level. The market's overbought at this level. What you need to be doing is thinking about taking some kind of a profit. Taking some kind of a profit and certainly not taking a trade or an entry. Now, if you're wrong, this is what I mean about a probabilities game. If you're wrong, market pushes through resistance. What happens when you push through resistance, guys? Time and time again, it comes back and it tests support. So when it tests support, that's when you're interested on this channel, guys. It's all about probabilities. A support buy means that the bulls have got momentum. That means that the bulls have got control. A support buy is the same as this resistance buy here. So what I'm saying is you can tell when there's resistance. You've got these candlestick patterns. You've got the candlestick patterns at resistance. You've got your lines built in at resistance. Then you add in your stochastic. If your stochastic's overbought, it's telling that the momentum's lost. The bulls need to cool off. The bears need to take some form of control. Now, this is the aim of the game. Let's get rid of some of this. This is the aim of the game, guys, with the stochastic. If you're trending bullish, when the stochastic comes back down to an oversold position is under 20. When it comes back down to an oversold position and you've put in a higher low, that's indicating that the indicator's reset. We've come from overbought to oversold. That means that the bulls have got another turn, and guess where the bulls have got another turn? On the higher low. That's how you can use the stochastic to your advantage, guys. That's how these videos are going to follow on. So you've got your trend lines, you've got your candlestick patterns, you've got your stochastic. We're going to be talking about the actual RSI in the next video. So shall we follow this through the chart, guys? Before we do follow it through the chart, actually, let's talk about candlesticks a little bit more. We did briefly touch on candlesticks in the previous one, but I'm going to teach you how you can tell whether a candlestick is strong, medium, or weak. This is just one candlestick. We'll go through an example. So you know you've got your wicks. We know we've got our wicks. Now we look at this, and what do we see? There's your open at the bottom. There's the close at the top. That is a strong bullish candle. Now, you can see the wick at the top. This is the extreme highs of the day. We've talked about that. So that's at some point, the bulls have managed to push price there, but the bears have managed to push price a little bit down. Still a strong bullish candle. This is an even weaker bullish candle. This is a mid bullish candle. And you can see this after certain candles such as this. You'll see a big move to the upside. And then another candle where you've hit some form of resistance. It doesn't mean that the next candle can't do this. That's still a strong candle. If the next candle took out the previous extreme high of the next candle, that's showing that you're likely to get another green candle. So this would be strong. This would be strong. Now, back to the one candle. As it gets weaker and as it gets further down, this bullish candle becomes more bearish. Now, we know that a green candle, you've got the open, and when the close is above the open, that's a green candle. So it's still a bullish candle, and the bulls have still got control because they're finished higher than what they started. However, at some point, this candle has been all the way to the top, and the bears have managed to push it all the way back down. So you can see that that's weakening. You see that's weakening. And that's another indication if you're seeing something like this at a resistance level and your stochastic is overbought, that would indicate that you're likely to get some form of a reversal. You see these things happen time and time again. Then, as additional compliments, guys, if you got this, there's the open candle that come back down, close below the previous candle, turn that red. That's a strong indication. That's a strong indication that the next candle is going to be red. And then this is going to be the failure point before we need a pullback, a cool down. If you're putting in higher highs and higher lows, guys, once you've got a cool down, you wait for the stochastic to come back. You're putting in a higher low. If you're putting in a higher low, that's where you're looking for new entries. So these little things can give you good indications. So have a quick look at the chart and go through some examples of bullish trends with stochastic and bearish trends with the stochastic, and then the sideways choppiness. And we'll use the big daddy in this. The big daddy's got the most amount of data. So we'll be using Bitcoin for this example. I'm on the weekly chart. Remember, guys, the higher the time frame, the higher the conviction. The higher the time frame, the more eyes on the chart, the more buy orders, the more sell orders, the more people watching it. So we're on the weekly. And if you think about this, guys, from a longer time horizon, if you think about this as a 1 year, 2 year, 3 year, all you have to do is take positions a couple of times. When this comes back down, that's weeks, that's months. When it goes back up, that's weeks and that's months. So when I talk to you about time frame analysis, it doesn't have to be the 1 hour, the 4 hour. It doesn't have to be the daily, the weekly. It could be the monthly. It could be the 3 monthly if you're thinking from an investment perspective. However, the caveat, guys, what do I say on this channel? If you're holding altcoins, don't expect them to not drop 90, 95%. Other than Ethereum, guys, other than probably Solana, don't expect them to drop 95% during a bear market. So if you want to hold them during the bear market, expect to drop that 95%. So that's the one caveat. From a Bitcoin perspective, guys, that's completely different. We know that Bitcoin's been adopted. Over time, we know that Bitcoin goes up. Bitcoin has its bear market. If we actually measure Bitcoin's bear market, I digest here. Bitcoin's bear market lasted, what have we got? 52 bars, 364 days. Exactly 1 year, guys. So Bitcoin's bear market had lasted exactly 1 year. And so far, Bitcoin's bull market has lasted 812 days. So we know from a Bitcoin perspective, we know that Bitcoin gets hit. It does drop. When it drops, it can drop hard. It can drop 77%. It went right to the bottom at $15,500. So when you compare that to the altcoins, though, guys, you stick $1,000 in altcoins, your $1,000 can go to $10, it can go to $15. That's how extreme it can get. So if you're thinking of holding high risk altcoins, layer twos, things that are probably not going to be around for the next bull and expect to lose your bags. So we talk about caution, we digress, and then let's get back into the stochastic. What I'm going to do is we're going to follow this along. So if we follow this along, we can actually measure the swings and how well we would have done if we'd have followed just the stochastic and support and resistance. So there's the resistance level. There's your support level. We'll start down here. So we're coming from an overbought stochastic. Price is coming down. From here, price comes down. Measure it with this one. From here, price comes down 67%. So 67%, you can see the stochastic oversold for this period of time. So if you weren't entering in an oversold position, you weren't entering, but you were accumulating, you would have got this move here. This move here, it's only a little move, 63%. So 63%. Now this is quite a difficult thing because this is midway and this is stopped out midway. Didn't go to overbought. So what would you have done? If your strategy was to hold to overbought, you would be accumulating all the way back down, all the way back down. You would have dropped a significant amount more, 83%. So this is what I'm talking about, guys. This is a downwards range, but when you get into this choppiness, it becomes more difficult with the stochastic. When you start ranging, you break out of this range here, you break out of this range. So what happens here? We're going from oversold down here, oversold to overbought, all the way overbought finishes here. So if you'd have used the stochastic crossing back down and coming back down under the 80 level, that would have been 499% and you would have missed 17%. So you would have missed 17%, but then you would have missed all this downside here, which was 55.88%. So the stochastic's coming down here. Even as this is pushing up, guys, even as this is pushing up, remember the stochastic's a lagging indicator. You should never just follow the stochastic and use that as your strategy. If you do that, then it's a recipe for disaster, guys. Price action's key. The stochastic RSI is a lagging indicator. You add it to your strategy to say, is something overbought? Is something oversold? To give yourself additional probabilities. So it's coming down here. It's coming down here on the weekly time frame. We can all remember this, guys. We can all remember the May crash in 2021. Then you got the big pump, the next pump. So the stochastic's oversold here. This is where we start pumping. Then we go all the way up to 69,000. That's another 120%. So that's the upside. And we know we're at a resistance level. We know we're at a resistance level here, guys. We've got a rejection candle here. If we went into the daily, let's find that. Find that rejection candle. If we go into the daily, what can you see here, guys? So you can got firstly, so when you're in the weekly, it's 1 week. The price action is 1 week, but within that 1 week, you go into the daily and there's 7 candles within that 1 week. So you can get clues from the 7 candles that you wouldn't necessarily get within the week when you're at resistance. And we talked about in the last video, if you're at a resistance level and you're getting a spike up and then a spike down, i.e. a wick to the downside, that wick to the downside on a high time frame, you're going to get a big clue on the lower time frame exactly what's going to happen before it actually happens. So this is the clue we would have got. I've just hypothetically gone into here. You've got a double top, first and foremost. You've got a rejection at that. You know that that's a sticking point. You know that's a resistance point. Then what do we get, guys? We get this. We get a 3-bar reversal. You've got a big green candle to the upside. You've got the doji in the middle. That's the indecision candle, remember? This one. Then you get a lower low, lower close, which takes out the extreme low of the previous low. When that happens, that's indicating that you're likely to get downside. So we've gone into the smaller time frame and we've identified that was likely to happen. Overbought stochastic, it was likely to happen, as well as 3-bar reversal, as well as a double top. So let's go back. Let's follow it to the downside this time. So stochastic's coming down, stochastic's coming down. What's happening here? Price is coming down, price is coming down. Hit a sticking point here. Then we have another turn. So let me just measure this from the upside to the downside, 50%. If you're holding your bags for this amount of time, guys, and you're not using any kind of strategy where you're thinking the market's overbought, should I take some off the table? Market's oversold, should I be accumulating? If you're not thinking these things, you're just going to be riding the waves up. You're going to ride the waves down. Your P&L can go 1,000%, 50% down, 1,000% up, 70% down. And you ride the waves and you ride the troughs, and the emotions are going to get you. I promise you that. So the next one was this little thing here. Now, this was the confirmation of the bear market. We put in a higher high here, come back down. This was the higher low. That was the higher low. But this bounce, 46%. 46% bounce to the upside before Bitcoin put in its higher low. How could we tell that this was going to be a higher low and Bitcoin wasn't going to continue the bull run? This was a clue. Overbought stochastic whilst we've put in a higher low. So remember when I said we were trending upwards, when you're trending upwards and you're putting in a higher, this is a lower high, sorry, not a higher low. When you're trending upwards and you're putting in a higher low, the stochastics come back down and it's reset, you're likely to put in a higher high and a continuation of trend. Now the reversal here, you've come back down, you've put in a lower low, you've come back up and you put a lower high. So what's happened on the stochastic? You've come up into an overbought position. So you're in an overbought position, market's exhausted at this point, likely to pull back, and that was a volatile crash. We had all sorts going on there in the news. 63% to the downside. So I did say that this was going to be an interactive thing, guys. So you need to do me a favor now. It's homework time. What I want you to do is get onto your charts. Let's pull one up. This is what I want you to do. Get on your charts, whatever chart it is. And what I want you to do is add in your support and resistance lines. You know how to do that? Go back to video number 2 when you're adding your support and resistance lines, and then I want you to look at how a candlestick behaves at your resistance line and how at your support line. Just identify how they're behaving. So when you see something that's got a volatile spike to the upside, i.e. the extreme, that's been pushed back below your trend line, then I want you to go back into the lower time frame. So if you're in the weekly, go into the daily. If you're in the daily, go into the 6 hour, go into the 4 hour. If you're in the 1 hour, go into the 15. Whatever your time frame is, guys, we talked about that in previous videos. Make sure you understand what time frame is best for you. So you go into your trading time frame after you've been into your higher time frame, which is your bias. That higher time frame is going to be your first clue, i.e. the wick's pulling back into your resistance line if it's pushing up. And then you're going to go into the lower time frame and you're going to understand and you're going to identify exactly what's going to happen, because that's going to be your front run in the market. If you get a double top, if you get a 3-bar reversal, that's indicating you're at resistance when it's going up, and you're likely to get some kind of a pullback. You're likely to get some kind of a pullback and you're at an overbought as far as the stochastic's concerned. You need to be doing that as well. Overbought when the stochastic's concerned, then expect the pullback. Now, if you're in a bullish trend, expect the pullback, but expect that higher low. And we can identify that higher low by the stochastic coming back into an oversold position whilst you're putting in that higher low, guys. We can use Fibonacci's. We're going to be talking about Fibonacci's and how you can use that as additional confluence in the next video, because what often happens, guys, is it'll pull back to the 618. It'll pull back to the 618 if you're in a bullish trend. The stochastic will come to oversold. You're hitting the 618. That's going to act as support, and then you're going to continue trend. You're going to understand all of this at the end of these videos. But one thing, guys, help me spread the word on this, because I don't get many views on this. These are the ones that I like doing. These are the ones that take me about 4 or 5 times longer. I don't get anything for it, guys. It's just I want to help as many people as possible. Like I say, I haven't got many people to talk to. This community of ours is something that I feel really, really, really happy about. And getting these 8,006 subscribers, guys, and getting the interaction that we're getting at the moment, and meeting all of these people and having all of these opportunities within the space is exactly the reason why I started this YouTube channel. So this is where we can all talk, guys, and this is where it would be good to get any of you guys that are on this tutorial session that are doing crypto class. This is where you need to be, guys, because this is where we can talk to each other. This is where we can really interact with each other. And this is where you can ask me questions. And this is more importantly, guys, where I want you to be posting your charts, because it's an interactive thing. This is your homework, and I want you to actually do this. Remember, you're learning. You'll be doing things wrong. You'll be doing things right. You're learning, guys. And one thing that I will tell you is, as time progresses, things will start clicking into place. But you will not understand everything along the way. So get on the Discord group, ask the questions. Some great people in here already. There's some really, really intelligent people in here already. Every single person within this community is a nice person. So I want you guys in here as well. Get yourself in there. I've got a link in the description below, and I'll see you in the next one.